Good afternoon, students. I am going to review the information I sent you yesterday covering closing entries. We're going to start with the adjusted trial balance, which is where we ended with Chapter 3. The adjusted trial balance has the debits and credits from all the transactions that the company has completed over the accounting period. What we have to do with the closing process is we have to close out the nominal accounts, which are the dividends, revenue, and expense accounts. And we do that so that we can start the new accounting period with zero balances in all of these accounts and to update the retained earnings account. We want to start the new accounting period with zero revenue, zero expenses, and zero dividends, and then we'll begin to accumulate the activity for the new accounting period in these accounts. So let's look at that closing process. So this is the same document I showed you yesterday that I sent you, but it was already completed. So I thought it might be helpful to actually see me complete the document. So what I have done is taken all of the balances from the adjusted trial balance and entered them into the general ledger, which are these T accounts. Retained earnings from that sheet had a $1,000 balance. Service revenue was $9,000. Utilities, salaries, and supplies have all been entered with their balances. And then dividends. The income summary already has the balances in it, but I will show you how they got there. The 4-step process for closing is for us to close the income summary statement credit balance accounts, which are revenues, to the income summary. Then we want to close the income statement's debit balances, which are the expenses, to the income summary. We're going to then close dividends to retained earnings, and then close income summary to retained earnings. Now you'll notice on that adjusted trial balance that you have a copy of, there is no account called income summary. That account is used strictly for closing. So we create this as a vehicle to make our closing process work. The first entry is to close service revenue. Service revenue has a credit balance. So in order to make it zero, we need to debit $9,000. And we'll call that number 1. And when we debit, and the debit and credit equal each other, we subtract, we get a balance of 0. The corresponding, remember every debit needs a corresponding credit, the corresponding credit goes to the income summary. So that is where this $9,000 came from. And so that's journal entry number 1. Journal entry number 2 is closing the expenses. So what we have to do is we look at our expense accounts and they all have debit balances. So to make them 0, we need to credit. So we will credit the utilities expense for $1,200. It's now 0. We will credit salary expense with $2,300, and it's now 0. We will credit supplies expense for $1,500, and it's now 0. And then we'll add up these 3 items, and they total $5,000. And so the debit of $5,000 goes into the income summary. So that's journal entry number 2. The next process is for us to close dividends. The dividends have a debit balance, so we're going to credit $600 to dividends, call it number 3, and now that is 0. And then we're going to have the corresponding debit go to retained earnings, and that is going to be number 3. So that's the third journal entry. And then lastly, we need to close the income summary account and make it 0 and update retained earnings. So basically what we have the revenue at $9,000. We have the expenses at $5,000. So what does that mean? Revenue minus expenses, that's our net income. So our net income is $4,000, which is the balance of our income summary. We want the income summary account to be 0, so we will debit the income summary and call that journal entry number 4, and we will credit retained earnings. Call it number 4. And now our income summary is 0. So now all of our accounts are 0 except for retained earnings. So what retained earnings has, it has the beginning balance that it started the period with, it has the net income for the period, and it has the dividends paid. So this is the update for the activity of this accounting period. So to find the balance, we add our credits, and that's $5,000. Our debits equals $6,000. We take the smaller to the larger and we subtract. And our balance in retained earnings is $4,400. So that's the updated balance for the activity of this accounting period. So that is the closing entry process. Now, let's go to the next step in the accounting process, which is the post-closing trial balance. So after we've finished, accountants are very concerned about making sure everything is still in balance and equal. So we enter in the balances from the adjusted trial balance for the real accounts, which are our assets, liability, and equity. And you'll see that the retained earnings account has been updated to $4,400. Our post-closing trial balance is in balance, so we are ready to start the new accounting period with all of the information being updated and all the revenue and expense accounts being 0 along with dividends. So hopefully this actual demonstration will help you with the Chapter 4 closing entry process, and you will have success in completing the problems.